Okay, so here we go. All right, I want to do a quick video here that is explaining the difference between the Iron Condors and the double diagonals I've been doing. Okay, so the last video I did that American Airlines AAL double diagonal. Okay, watch that one for exactly everything I did on that and why and all that. So here's the existing one here. So you can see kind of where price is right here. I kind of do expect it to bounce somewhere down in here. And then I've got a lot of upside potential here on this. So we can have a good amount of profit on that. So let's see. Let me pull up the thing here. Okay, so here's what I'm going to show you here. So the difference between doing the Iron Condor with the exact same strikes, but if we just did those for all expiring on October 5th. So imagine these are just October 5th here. So you would have a $4 wide spread on the put side and a $3 wide spread on the call side. Okay, so that would give you a $66 credit. Okay, now remember your max loss is the difference between the strikes. I kind of have this one skewed a little bit, so it's 3 wide here and 4 wide here. So we'll go off the widest one. That's how it decreases your buying power too. So it's 4 strikes wide, be 400 minus your 66, which is $334 risk to make $66 then, which is not really good in my opinion. But in either case, if that's what you were going to do, that's fine. But let's do this. Let's show that one here real quick. Here's what I want to show is where our break evens and everything are at on this. So on the put side, so here's our break even on the Iron Condor. It's basically, let's see, what's our bottom strike? Right in here. So here's our break evens here because we are taking a credit on the other side. Our max loss is here. Okay, it's 33, the farthest strike. If it's in between here, you might have some loss. Anything over that $66 credit is where you're going to get into loss. So 33, you're going to be $334 loss, max loss on that on this side. And then if it hits 46 on this side, you're at $234, and that's because I have only 3 strike width on this side. So and there's our break evens. I just jot them down here. They're 43.66 on the high side and $36.34 on the low side. So then going back to, all right, so let's keep this in mind right here. Okay, remember you can lose $334 right here when it hits 33. Okay, so let's take that one off. Let's go back. Let's show the double diagonal that I have open right now. Okay, so here's our break even. Let's see, break even on that's 36.52. Our break even on the other one's like 36.34. So our break evens are about the same. Okay, so here's where the major difference is. Is our when we get to that max loss on the other one is at where was it at the 33 strike. Okay, it was max loss. That was $334 loss on the other one. Okay, now check out the difference here. We're at 230, 240. Okay, so $90 less loss for it getting to the same strike. Okay, because you're holding longer term puts and calls on the other side of this here. Okay, the ones that you bought, they still have some value basically. So theta value, I should say. Now, $334 loss. Let's see how far it would have to go down just to get to that same loss that you would have on Iron Condor. Okay. So 334, if we keep going, looking at the number zone side, keep going. Look at this. It would have to get all the way down to below $31 before you have the exact same loss on this double diagonal versus an Iron Condor. That is why I'm not doing Iron Condors anymore. So let me show you this on the chart, okay, visually, so you can see this. These strikes here, this is what I've got set up on my double diagonal. If it's within, these are my break evens. So right in here is going to be max profit on this side, max profit on this side if it closes the expiration on October 5th. Okay. Now our max loss on Iron Condor is the outside strike. Like if we were doing a credit spread. Make sure you know the difference between credit and debit spreads too. That's a whole other thing. I'm not going to get into that. I'm just assuming you already know the difference if you're watching this one. So if not, go back, look at those, make sure you understand those first. But this is on a credit Iron Condor. Right here is going to be this is going to be your max loss here. If it gets to this mark, you're at max loss. Remember, our 33 was on the bottom side on the Iron Condor. Max loss there. Now, look at the double diagonals, though, where your max loss is, okay? Or, well, I shouldn't say max loss, but like the equivalent loss. So if you want to lose the same amount on the Iron Condor, it has to get all the way up to 50, another $4 higher to have the same equivalent loss as on your Iron Condor. So, I mean, and we're only talking like, what is that trade? It's like 3 or 4 weeks out. That would be a crazy move for that to go to 50 in that amount of time. That is very, very unlikely, not impossible, but unlikely. So your diagonal, I've got an October front month and November back month. Okay, I've got $9 cost in the trade. On the high side, if it closes up in here, it's got like $148 potential profit. But I want to do the $400 is the risk, because that's the difference between my strike width, and actually that's on the low side. But that 148 would be profit. If you're comparing it against the risk, is 37%. If that makes any sense, you can say, you know, I spent $9 and sold it for $157, and I'd had some crazy percent return. I mean, yeah, basically you do, but you do have to kind of look at what's your risk, and that's the difference between your strikes here. So that's what your risk is $400. You have the potential to make that on $400. Then on the Iron Condor, though, if you were just doing October 5th expirations on both, you got the 66 credit. That means you take in $66. If it closes like right in here, you keep the 66. That's your most that you're going to make on that. Okay, you know what the maximum amount you're going to make on that is. Okay, now that's on $334 worth of risk. That's only 19% return. So look at the difference there. So your percent return on your risk is almost double. And look at your max loss equivalent from the Iron Condor to these double diagonals. Look how much wider that is. I mean, I wouldn't see this moving that much by October 5th, but who knows? So I'm kind of playing that it's going to kind of trade within this range. I'm a little bit under support area here, and then kind of in resistance level here. That's why I kind of like these strikes where I set them up at. So, and it's kind of been bouncing along the 50 days. So this thing could close right in the middle. So going back to profit on that, remember anywhere in between there's profit. Here's when it gets up to, closer to your higher strike, when it gets closer to 30 or $43 is where you're going to be having your max profit at. You know what? I may not have said the profit numbers on that. I was right. $38 and then 77 on the high side. I don't know where I got 148 from. I just made that one up, I think. I don't know. I just look at numbers all day. Okay, so if it closes exactly where it's at right now, you've got $27 profit on basically $9 in the trade then. So here on the low side, you're at $40. I kind of predict it to kind of hang out in here a little bit and then get back up into this range. So you're really making, most of your profit's going to be here. But look, anywhere in between there's going to be profit. So, that's pretty good news there. Yeah, I may have something wrong on the numbers here, and I'll have to go back and look at that anyways. But that gives you an idea, though, between the Iron Condor and the double diagonal. Never mind. I'll have to double check that. Maybe I'm thinking of a different trade, maybe. But that's still your equal loss is still out here. So that's what I'm comparing here is your potential loss. How much wider of a range you've got until you get to that amount of a loss on a double diagonal, which is basically a calendar spread, Iron Condor, vertical credit spread. I don't know, combination, a little bit of everything. I don't know if this stuff makes any sense to anybody, but let me know if you have any questions, and I'll try to do another video kind of outlining some different things I'm kind of looking at on these two. So that's all for now.